and welcome. You're watching Money 9. I'm Sakshi Batra, and on this show, we discuss everything about markets and fundamentals, which where the market's headed, and which are the pockets that you can make money on. To discuss all of this and much more on markets, I have with me a very special guest joining in. Mr. Kranti Batini from Wealthman Securities joins in on this edition of Market Meter. Good afternoon, Mr. Badini, and thank you so much for taking out time for us. Well, the market's mood is quite buoyant as of now. We are seeing both the Sensex and the Nifty up over 1%, and that is after the sharp fall that was seen in the second half in yesterday's session. The closing was in the red. But again, the markets have bounced back quite strongly, and we are inching towards those all time high levels yet again. How are you analyzing the current scenario of the markets, and what are you recommending to all the investors at this stage in time?
Sakshi, we are following a strategy that is buy on every dip. For example, yesterday we had a very ferocious sharp fall in the second of the market. So whenever such kind of sharp declines are coming into the market, next day the markets are bouncing back. So this has been historical in the sense from past. If we understand the trends of the market, the liquidity that's driving the market at the current market conditions, okay, they are not giving any opportunity to bears to take any further strength. So
Right.
investors need to have a portfolio strategy. Don't look at what's happening in the indices. Look what's happening to your stocks and how your stocks are going to respond to the movements in the indices. So look for the stock specific actions are concerned, and whenever such a sharp declines comes in the market, go and grab those declines. So it is a completely buy on dips and sell on rally market.
Okay, buy on dips and sell on rally kind of a market in the current scenario. So we are also moving ahead on a lot of factors that will be impacting the market mood going forward. Beat the earnings season, which starts off tomorrow, kickstarts with TCS earnings. Of course, the IT sector has so far been an outperformer in the markets. Going forward, there is a wide expectation that this time around, earnings as a whole may be also showing some kind of more uptakes over here. How should one really approach the earnings season? Is there any particular sector that you're keeping in your mind in hopes of better earnings coming here so that you can also grab onto those shares?
Sakshi, with respect to earnings season is the Q2 earnings season is crucial for the market.
Hmm.
Earlier, when we interact with the promoters and the people running the companies, they
Right.
have many excuses. Lockdown has been hampered our business, so the numbers are not at par with the expectation. Right now, with Q2 is concerned, what we can see is Q2 we have seen the complete lockdown restrictions are lifted in most and majority of the sectors, and the economy is coming back on its track. And also,
Hmm.
what we can envisage is when we uh, see the pent up demand, the different high definition parameters, they are in line. So Q2 is the numbers are extremely crucial for the market. It gives the direction, and we'll see probably in majority of the sectors there will be a earning upgradation. So there will be many prodigal sons, okay, that comes back with respect to their earning season is concerned with
Hmm.
and also we can see a complete revival with respect to the earning season is concerned. That waves the roadmap for the future outlook of the market. So
Hmm.
what we can expect with respect to the sectoral performance is concerned, of course we will see some sort of earning upgrade with respect to technology, and pharma has been with respect to their performance is concerned, they have been a laggard from quite a last I can say 45 days. So we need to look into the stock specific action rather than a sectoral specific action is concerned.
Okay, understood. Earnings may be better for many of the sectors, but it's better to remain stock specific as we move forward. Also, as we move ahead, we are going to be expecting RBI's Monetary Policy Committee to come out with its review on October 8, again Friday. Of course, we have been in the middle of this time, seen how the global central banks have reacted, and there is somehow kind of an anticipation as to whether the Indian central bank will also follow suit as far as the rate hikes are concerned, or the tapering of liquidity is concerned. Your thoughts here as to what will be crucial for the markets to track in the RBI's Monetary Policy Committee meeting tomorrow?
With respect to the MPC meeting is concerned, I am also crossed my fingers how RBI going to take action with respect to the reverse repo is concerned.
Hmm.
So, so whether how the measures will take care with respect to the short-term liquidity in the system is concerned. But what my sense is, RBI is always accommodative with respect to the liquidity is concerned, and also the current MPC is more growth led rather than the focusing on the inflation is concerned. So right now, they don't want to compromise. I'm sure growth is very important at this juncture. We are just coming out of the pandemic with severe lockdowns and complete disruption in the economy. So I don't think RBI is in a hurry to increase the interest rates, because we always maintain a tight monetary policy in Asia Pacific PAC is concerned. Our Indian
Hmm.
central banks are very cautious with respect to monitoring the liquidity in the economy. So
Right,
we are in a high interest rate regime when we compare the Indian monetary policy with the global peers. So
right.
I don't think so. RBI is in a hurry. MPC is in a hurry to go and jump the tightening the policies. I'm not, I don't think so. But RBI is the current MPC is they focused with respect to the growth, and growth is extremely important to Indian economy at this juncture. So what we can expect is accommodative monetary policy in the coming upcoming meeting.
Absolutely. The fingers are crossed for an accommodative policy, which may be supportive for the markets also. Since you just said that, even as we move ahead into the earnings season, it is important for investors to remain very, very stock selective. I wanted to point out to the stock recommendations that you've done on the show before, which have already garnered a huge wealth creation for a lot of investors who invested on your advice. And again, we'll go on to understanding today's stock recommendation as well. So first up, I wanted to ask you on Piramal Enterprises, which you had, recommended back in the month of January at the starting of this year. You had recommended this stock much before any kind of move that was seen. And after that, there has been an extremely sharp surge that we've seen on Piramal. And all the investors have made tremendous wealth here. It has crossed 3,000 level as well. So very sharp uptrend. How should new investors approach this stock? Does it still merit a hold for all the investors who've been getting all the kind of profits so far? On the other hand, another thing is Gland Pharma is another stock that you had recommended much before the vaccine play had started to play out in the market. Both of these stocks have actually made tremendous wealth for all the investors. So congratulations first to you for picking out such excellent stocks for all our viewers, and help us understand with your view now.
Sakhi, with respect to Piramal Enterprises is concerned, of course, you're correct. We advised Piramal Enterprises way back in the month of Jan when the stock was hovering around 1400 levels. Congratulations to the investors who were bought this stock on dips in last 5-6 months also. The stock has generated nearly 107% return from the time we advised this stock. One thing is, this is one of the underowned company in India, and also the company have a natural hedge in this company. 50% revenues comes from financial sector, 50% revenues comes from pharmaceutical sector, and led by one of the top class management in India. And the stock have created nearly 50,000 crores of wealth in past 6-7 months during this rally. Highly liquid stocks, investors with whatever be the quantum of money, they can enter and they can exit easily. Of late, we have been listening about the stocks getting multiplied, wealth creation, multi-bagger stories. But how many stocks will qualify for a perfect multi-bagger is hardly very few in the market. So Piramal is a highly liquid company. Investors, HNIs or retail, whoever it may be, institution can enter and exit. That is very important when we are doing any stock picking analysis, and also with respect to the constructing the portfolio is concerned. So with respect to the current acquisition of DHFL, it will add a lot of value to the Piramal overall financial sector business. So I remain positive with respect to the prospects of Piramal Enterprises is concerned, those investors, they can who bought around 1400 levels, they can book some small profit from their portfolio because the stock has delivered nearly 100%. But those who want to enter again, definitely it is a stock to watch for in next few years. Every dip is warranted to accumulate Piramal Enterprises in their portfolio.
Okay, Piramal Enterprises, Taylor Bio and Dips. And what about Gland Pharma, sir?
Sakshi, what we are thinking is, of course, hope you and me are. I covered my second vaccine dose. Uh,
Yes.
hope the same case with you. But
Yes.
what we are witnessing is, if we see the Middle East and Dubai, they're talking about the booster dose. Of course, we are in a premature stage in India, so the vaccine play is going to be there. And Gland Pharma, they have a tie-up with Sputnik to produce vaccine. It is one of the very good pharmaceutical company. From the inception, they have not received any US FDA warnings. So they are well positioned to take the advantage in the pharma journey in the days to come. So Gland Pharma is a best position to take the advantage. So any dip in Gland Pharma, investors can accumulate for a longer term.
Hmm. Okay, understood that. And what would be your recommendation for today, sir?
It is a follow-on recommendation. We advised Bharat Seeds earlier also. So I want to stick to Bharat Seeds. It is a associate company of Maruti, and this is one of the very underowned stock in the market, and also very few institutions hold this stock. Uh, Majority of the stake is held by Suzuki, Maruti, and also the promoters of this company. So nearly 77% of the holding is held with the promoters of this company. As Peter Lynch says, to create wealth, one need to go into the stocks which are underowned by the institutions
Hmm.
and the stock have with strong fundamentals. Bharat Seeds qualify this criteria since it's a Maruti associate, and right now what we witnessed is because of the chip shortage and various disruptions in the auto sector have been laggard. So Bharat Seeds is one of such company right now, but the prospects for Bharat Seeds looks very bright. So investors with a long-term horizon definitely can accumulate Bharat Seeds without any hesitation. They can accumulate for a investment horizon of 1 year. Definitely, Bharat Seeds will deliver the good returns for the investors.
Okay, understood that. Well, thank you so much for this recommendation, sir. And always a pleasure having you on our show to seek all the insights on the markets and speak on various subjects in different sectors, how they are performing, and to seek all the tips and tricks as to how the investors should be going ahead so that their portfolio also gets a lot of wealth creation. Thank you so much for being with us and speaking with us on the show.
Thank you, Sakshi. Always pleasure is mine.
Thank you. Let's now move on to see how the markets are also trading at this point in time. Of course, at day's high, Sensex and the Nifty, both of them up over 1.2% each. The Nifty Bank is also inched up higher at 1% uptick right now. 400 points addition on the Nifty Bank, 718 points of an addition on the Sensex, just 100 points away from that 60,000 mark. Talking about the broader markets as well, they are outperforming the benchmarks today, especially led by the gains in the mid caps with the 1.7% uptick. 441 points have been added on the BSE mid cap, which is trading at 25,815. Sectorally speaking, all the sectors have been trading on the higher side right from the first day, but it's one sector that is really standing out, the realty sector, with over 6% of a sharp up move that has been seen. The index is trading at a 12-year high, followed by the sharp move in the auto space as well. Look at the sudden 3.8% of an uptick being seen here. The IT space, again, quite buoyant right ahead of the earnings season starting off tomorrow. Apart from that, the metals, pharma, IT space, FMCG, all of them are moving in tandem. The banks are participating as well, 1% gains for both the PSU and private sector banks as well. Overall, broad based rally that we are seeing today, especially when we talk about the Nifty 50 gainers. You'll be able to see a Tata Group names coming to the fore. Titan up almost 10%, Tata Motors up almost 10% yet again. So, very sharp move being seen here. On the other hand, from the auto space, it's Maruti and M&M that's moving higher. IndusInd Bank also clocking in 3.5% of gains. On the losing side, very few losers at this point in time, but ONGC is seeing profit booking. Cipla, Dr. Reddy's, Divi's Laboratories from pharma healthcare space, and Coal India seeing slight drag at the moment as well. But overall, the market move seems quite buoyant. How do the markets progress from here, and what should you do with your money in markets? Well, we'll keep you posted with all of that. And for that, you need to subscribe to our channel, stay with us via social media handles, and visit our website, money9.com.